Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 21st of March. So I've seen some pretty good moves this week in between key zones on the currencies and some of the indices. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So I'll start out here with the Aussie USD, and we can see that we've had a pretty good week in terms of the channel movement that we've had. Basically has been established since the 62-cent mark and the 64-cent mark. We've been trading in the middle of that zone for quite some time, but this week we saw pretty much half of the range form. So basically from the middle of the channel here, around that sort of 63-cent mark, all the way up nearly to 64, we got to 63.90. So that provided some pretty good opportunities for trading, because when you go to a smaller time frame and you're looking at the scalping opportunity, say even on a 15-minute chart, you can see when you take it right out how many opportunities we had to actually get in on this trade. So the middle of the channel was around this level here, and you can see if we were looking and aiming for the longs, we're looking for the series of higher highs and higher lows, pullbacks to the 20 moving average, and you can see how many entry points we would have had. Plenty of opportunity to get in long. And as you can see, once you've actually got an established trend in your direction and you know where the targets are, there really is only one decision to make. And as soon as it pulls back to the moving average, that's when you're actually looking at reloading and pushing forward. So really, really good trading on the Aussie USD. The short was actually not much different. You can see once it did start to fall over, you can see that we've had lower highs and lower lows. And basically we find ourselves back in the middle of that channel. So not bad trading on the Aussie USD, but again, it's one of those ones where we're still in a big 200 pip channel really between 64 cents and 62. All we're doing is using the higher highs and higher lows, or lower highs and lower lows, to aim for the boundaries of that channel. And the moving averages are still flatlining on the bigger time frame, so pretty straightforward trading until we get a close on either side of these boundaries. All right, we'll move on over to the US dollar CAD now. And we can see that we had basically a bounce off the support level, which we expected to get. I mean, this happened on Monday. The 143 is a pretty strong support zone. We know this already. It's also trading inside a channel too, so very similar to the Aussie in that respect. But we know we've got a very, very solid channel here, very strong support here at 143, and came down, tested it, and then pushed up higher. Look, it tried to go for a reasonable move up. It's only been a 100-point range really for the week, or just over 100 points for the week. So it's been a pretty tight sort of range, and respecting the boundaries quite well. But this is a pretty big sell-off off a decent move up. Like, you're talking about almost an 80 pip pullback in the daily session. So we'll go to the 15-minute chart and we'll have a look at see how that played out during the day. And as you can see, it was a very, very sharp fall that was going to be very difficult to get into, to be truthful. Like, you wouldn't be able to, you have to go to a very small time frame to isolate a pullback that would have been able to get you in. But that happened in a matter of hours, as you can see, and very, very sharp. But our support at 143 still holds true. So it's one of those trading opportunities where you really have to basically trade inside the zones again, that 144.50 and 143. If you keep inside those and really follow the higher lows and lower lows to the boundaries, you're going to get reasonable scalping opportunities. Remember, we are still in a scalping zone at the moment. We haven't really established full trends, so there's still a lot of opportunity to make small gains in between these boundaries. So again, I just follow the big moves, and when we get a daily close above 144.50 or below 143, we'll be looking at it with a different lens. All right, over to the US dollar yen now, and this is again another one that attempted to go higher and was pulled in by the 20 moving average. I like this one in particular because we've got the 20 moving average and a roll reversal zone right here at the 149. Okay, so as we can see, attempted to go higher, tried to break through the 20 moving average, pulled back underneath the 149, providing a pretty good opportunity for a reversal. So really, we've been in a downtrend for quite some time. Like, there's no secret there that it's been respecting the 20 moving average all the way down. And this was just another attempt up. The only difference with this one is we had the backing of some resistance in the form of a 20 moving average and a roll reversal. And it's happened it's a few times now. You can see it happened here. It's been perfect from a technical standpoint, actually. So realistically, now that we're below that 20 moving average, until we've got a daily close above it, so a daily close above 149.50, we're not going to look at any long opportunities on the US dollar yen. We'd only be looking at shorts. So if we see any form of lower high, lower lows on a smaller time frame, we'd start aiming for the bottom boundary. Okay, so around here at around that 146.50. Pretty good trading, has been very, very solid on a technical. So again, it's one of those ones where if you looked at it from the week, you can go to a 15-minute or a 1 hour. It depends on really what you want to, how you want to trade it. But you can see here, we had really, really good opportunities to get in on this long from those lows. Once it started to sequence higher, high, higher, low, pullbacks to the 20 moving average, pretty straightforward. Okay, and the 1 hour is also another one that you can really scalp from. It's pretty good. And you can see here again, we've got the higher, high, higher, low sequences that enable us to reach those highs. So pretty good trading, but again, you've got to be still in scalp mode and trading between these zones. But this has been technical perfection really for quite some time, falling at perfect levels and pulling back and reversing at perfect levels as well. All right, we'll move over to the dollar index now. And yeah, look, this has been a bit of a resurgence this week. It tried to go lower, no question about that. Early in the week, you can see that it tried to make a new low, just closed right on it, but it is starting to reverse a little bit now, and it's trying to get itself back above that 104. Hasn't closed yet, this candle, but if we start to trade above that 104, and especially 104.20 again, we can start to look for moves back up to the 20 moving average. I think that's probably the first target, that 104.66, sorry. That would be our first target for a long, but of course the euro is the one we want to be talking about. We'll get to that in a second, but yeah, this is a very strong sign that we're about to potentially see a reversal. So we do need to close above 104.20 though of a daily candle. If we get that, we're going to certainly have our eyes on a potential move back up to that 104.66 where the 20 moving average is right now. Of course, that's going to fall a little bit on every daily candle that closes before we reach it. So it's going to be the first target no matter where it is. But even at this level here around that 104.50, you can see we've got resistance points at that juncture there anyway. So if it gets there in a relatively quick manner, the 20 moving average might help us. But other than that, 104.50 is still the target that we'd want to be aiming for out of this little break. It's only a scalp again, but it's one of the ones that are making the most amount of sense. The euro, of course, is the reverse of that, and you can see that we've got weakness at the tops. It failed to make a new high above that 109. It could not get past 109.50, as you can see. Pulled back down pretty quickly and is now trading underneath the resistance. Makes sense because it's obviously the opposite of what the dollar index is doing. Very interesting to see where it goes from here. For mine, I think the 20 moving average is a logical target around that 107.50 right now. But again, that's going to creep up a little bit. You can see these points here around 107.80. I'll pop a horizontal line there. They're the points that I'm talking about. You can see two support bounces off that level. Okay, that's probably more than likely the area that it would find support again. If it continues to sell off, 107.80 is probably the target you're going to get. So about 70 points from here. I'd be looking for lower high, lower lows to get to that point, and the 20 moving average will catch up in a few days. So if it happens all around that time, it will make it even stronger. And then we're looking for a move up to the 109. So pretty good trading on the euro. I wouldn't go long on this until it actually closes a daily high bigger than the 109.50. If it closes over 109.50, it's a different story. And onto the S&P 500, very, very mixed week. You can see that each of these candles have been very, very, difficult to actually break through. They've basically replicated the range of the previous candle. It's been a very, very mixed up week. You can see that each candle has cancelled each other out. Today has probably been the weakest day of trading, but the three previous days have all been very, very equal. So it's one of those ones that's stuck in a bit of a rut at the moment. It's right at the level of support here at 106.50, 56.50, sorry. You can see that we've got two very strong resistance points there that can provide support if it does turn around. But for mine, until it closes above 5,700, I'm not going to be really interested in this. I'd only be scalping the ranges in between these two zones. So if you're looking for scalping opportunities in the S&P, I'd be looking for setting the boundaries of this week, so around the 5,600 and also the highs here at 57.15. If you do that, that would be the scalping opportunities that you want to get into. Aim for those boundaries. When we get a daily close above or below either of those levels, we would be looking at a more sustained trend. But until then, we're just going to try and scalp inside those two tight zones for the S&P 500. But again, you know, very, very tight zone really in the context of what it's been doing recently, and a pretty good consolidation area. But we could either see a big break lower or a break higher in the next few trading sessions. So we want to be certainly keeping an eye on it. But until then, we'll trade inside those zones. Thank you very much for joining me today, and I hope you've had a great week's trading. We've seen some really, really good moves in between the levels that we talk about all the time. So hopefully you're able to scalp your way through those markets. Have a fantastic weekend. I look forward to seeing you all next week.